Welcome to Short View Trading, your morning market hit for Monday, January the 10th. What matters today and this week for traders? Well, what a dramatic start that was to 2022. Indeed, as we highlighted last week at the beginning of this year, after such a strong run up into year end in the second half of December, many of our short-term market timing models were generating a pretty clear sell message, as you can see from this model in front of you now. And with that, we had a dramatic start. And a very dramatic start if you happen to own a bunch of tech stocks, particularly the mega cap tech names. Indeed, as you can see in this chart in front of you now, where we split the S&P 500 into the three key regions in the equity market. So the cyclical area, the defensive area, and the tech / growth area. You can see, of course, that tech and growth was a particular underperformer over the course of last week. And indeed, the cyclicals actually were up on the week, defensives also down. And with that, many portfolio managers reporting very dramatic, difficult underperformance, given the crowded nature of the mega cap tech names, the Microsofts, the Googles, the Amazons and the Apples of this world. Now that sector rotation, that sector performance translated across global equity indices. If you look at the US indices over the course of last week, you'll see they're pretty much all down. But the Dow Jones Industrial Average, a much more cyclical index, was almost flat, held back a bit to a degree by Microsoft, but a lot of the rest of the stocks and names in there are very cyclical in nature. Other indices, as you see on the chart in front of you there, the NASDAQ 100, the Philly stocks off dramatically. Equally, take that sector performance, rotate it, look around the world, look in Europe, you'll see much better performance across most Eurozone countries, as you see in the chart in front of you now. The exception being Amsterdam, Holland, where there's quite a lot of tech in that index. Other markets, Germany, France, Spain, Italy, up quite nicely over the course of the first week of 2022. And that's a classic example of rotation out of tech globally into cyclical, more value areas of the market, more banks and so on. And that's exactly why Europe's outperformed, given its low overall tech weighting, except as in Amsterdam, Holland, as I said. And driving all of that last week, very much the change in language from the Fed minutes, which came out, talked about balance sheet shrinking, quantitative tightening, the discussion they had about that. And that was backed up by a number of Fed governors over the course of the week, talking about and reiterating that theme, that idea that quantitative tightening can begin really quite soon after interest rate hikes get going. That had a significant impact on the tech sector, which really is a play on interest rates and emergency policy rates that we've had over recent years, and suffers therefore as a long duration part of the market when those yields start backing up. And look at the 10-year bond yield chart in front of you now, a very dramatic move higher in 10-year bond yields over the course of last week. So in terms of very big picture themes, the real question now is, are markets undergoing a major change in sector leadership, a change in the macro theme driving the leadership of the market that occurs once every sort of 5 or 6 years, every economic cycle, or every 5 or 6 years, you get that major change. You'll remember post-GFC, it was all about hunt for yield. Consumer staples and other income stocks benefit from that. In the last 5 or 6 years, it's all been about tech. And we address that question. We look at that in detail, look at the history of major shifts and what has driven them and what might drive it going forwards. We look at all that in our long view on Friday, available to subscribers. If you're interested in a copy of that, please email us on research@longvieweconomics.com or contact us through the website. But in terms of this video and the Daily Rag publication, the 1 to 2 week trades we like to put on, the question is, what do you do now? Is it time to move long, dip your toes into these markets, or should you stick with the recent downside momentum? And of course, the first port of call for us always is looking at the models. And the models have got some interesting messages, particularly some of the NASDAQ specific models. If you look at a put to call ratio or a short-term technical scoring system on the NASDAQ, they're now both on buy on that 1 to 2 week basis, as you can see in the chart in front of you now. Having said that though, some of the RAG models are not quite there at the moment. Some of them got a contrary message. So from a models perspective, there's some interesting things going on. And to see how we're playing this, please see today's Daily Rag available to subscribers via the website. Or if you'd like a 7-day free trial of that, simply click on the link below, enter your name and email address. No credit card details required, and we'll send you the Daily Rag for free for 7 trading sessions. So what are we watching today and this week? Well, there's a whole bunch of themes. It's a busy week for macro data. Plenty of stuff coming out of the States. There's a bit of an inflation theme in the US with headline and core CPI and PPI as well later this week. We've also got inflation over in China, CPI, core and headline. Elsewhere in China, we've probably got the monthly total lending data, although one never really knows when that's coming out. It's scheduled to come on Wednesday, but could come any day this week. Over and above that, of course, it's the beginning of the US quarterly earnings season in earnest. That kicks off on Friday with the big banks, JP Morgan, Wells Fargo, Citi, amongst many others. And those will get the earnings season going throughout the next few weeks. That often helps market to the upside. And over and above that, there's quite a bit of activity out of the Fed. We have the Jerome Powell and Lael Brainard up on the Hill for their nomination hearings in front of the Senate. We've also got a number of Fed speakers over the course of this week, culminating with Williams at the end of the week. So that's it from us. That's your morning market hit for Monday, 10th of January. Thank you for listening. Please do subscribe to these free videos on YouTube. Simply search under Short View Trading and click on the subscribe button, or follow us on LinkedIn, Twitter and or Facebook. Thank you for listening. Stay safe. Trade well.